Valens Research, Uniform Financial Analytics.
Zillow Group, right? Zillow, who most of you know from the platform, right? The Zillow app. So you can basically, if you don't like Redfin, the alternative to be able to look at the house that you want to buy or rent or the house that you own is worth. And so when you look at this from Zillow, you would say, wow, Zillow is a bad business on an as-reported basis. On an as-reported basis, you would say returns have been negative every single year. Similarly, not just have returns been negative every single year, the company's earnings themselves have been massively negative in many years, right? This company is not throwing off cash flow. Guess what? Management also saw that. And so what happened right around 2018 was because management saw that it had a bad business, because it was looking at the as-reported accounting metrics, it said, we need to change this. And so what did the management team do? They said, we're not just going to be a platform business anymore. We're actually going to first buy and sell homes. So what we're going to do is in big liquid markets like Phoenix, when we see a company that looks mispriced, a house that looks mispriced, we're going to buy that house. And then we're going to actually sit on it and sell it for a profit because of the fact that we think we have better analytics on the market by just giving people liquidity. And also we're going to offer mortgage financing. Basically, they said, look, being a platform business isn't making us any money, so let's turn into a bank, right? Because we have the data to be basically a data-driven bank, so let's be a bank. What they didn't realize was how terrible of an idea that was if they knew the real performance of their business. This company wasn't a negative earnings business, wasn't a company that had negative ROA before they blew it up with that strategy change. This company was throwing off over 20% a year ROAs in 2016 and 2017 and growing gangbusters, right? This was a high growth platform business. This is a business that investors kill for. Investors love these kind of businesses. Instead, what they did by deploying capital into this bank business is they destroyed ROAs because banks are lower return businesses. And because of that, valuations cratered, right? Valuations fell from a 3 times multiple from a 6 times multiple to a 3 times multiple. And the stock price basically cratered right from 2017 to 2019. It wasn't until 2020 when obviously the at-home revolution took over and people were have just been buying anything that has anything to do with real estate, that this company has recovered in valuations. Because it's not just investors that miss the boat when they look at as-reported metrics, it's also management teams. And this structural change that they made, which may have sounded great when they said, hey, we're not making any money anyways, was actually terrible when understanding how they blew up a platform business and turned an asset-light platform business and turned it into an asset-intensive bank business.
Valens Research, the world's leading source for uniform financial analytics.